Ladies and gentlemen, welcome to day 2 of the EIB's Group Forum here in Luxembourg, and also good morning to those watching online. My name is Natalie Reuter. I have the great pleasure to be your Master of Ceremony also today, and I will make sure that we stay on time. So let's dive right into our second day of this wonderful forum. Please check out our app and also answer the questions that are being asked by our moderators, because we really want this forum to be as interactive as possible. You will also, at the end of the forum, receive a link to a survey, and we are really eager to get some feedback from you. So, ladies and gentlemen, I have now the great pleasure to invite to this stage Mr. Jordan Schwartz, who is the Executive Vice President of the Inter-American Development Bank, and he will deliver the opening speech of our forum. Ladies and gentlemen, please welcome Jordan Schwartz.
Thank you so much. Now that I know that I'm being surveyed, I'll try to keep this as quick as I possibly can. I'm honored to be here with you today and to represent not only the Inter-American Development Bank, but by proxy, many of the global partners and friends that work closely with the EIB. I would like to extend my special gratitude to EIB President Nadia Calvino for her continued commitment to our partnership and for providing this opportunity to discuss the need for stronger collaboration among MDBs. As context to my message this morning, over the last few months, we've exited the Indian presidency of the G20 and closed COP28, with the MDBs being asked to take a much bigger and bolder role in addressing global challenges, particularly climate change, but also pandemic preparedness, migration, disaster response, and biodiversity, while doubling down on private sector-led growth, poverty alleviation, and social and environmental protection, the persistent demands of development. Over these last 2 months, the G20 has moved to Brazil, just as the Inter-American Development Bank takes the helm of coordination for the multilateral and regional development bank heads. This gives MDBs, who are in the spotlight in the global fora, an opportunity to coordinate our messages in front of main shareholders and largest borrowers, and to commit to actions that we jointly define as both impactful and realistic. So I will spend the next few minutes reflecting on our collective advantages as multilateral development banks and try to put this into the theme of the day, European competitiveness and the global context. I hope you will hear in my words a plea between friends and colleagues for even greater collaboration. That would be the key takeaway. Both parts of today's theme, European competitiveness and a polarized global context, are directly relevant to MDB collaboration in our agenda. To start with the second part of the day's topic, the polarized global context, from a Latin American and Caribbean perspective, when there is conflict, invasion, instability in Europe or anywhere, but particularly those conflicts that disrupt major trade routes, upend supply chains, diminish energy and food security, and thus drive up inflation and in turn interest rates and in turn debt burdens, our region feels the effects amplified. And the impact from global volatility is regressive, not only among countries, but within our countries too. The poor of our region, of all developing countries, feel the effects of volatility first and feel them hardest. On the first part of the day's theme, European competitiveness, may seem like an internal concern to Europe, but the world outside of Europe, particularly in Latin America and the Caribbean, cares a lot about the subject. European competitiveness, productivity, and wealth creation are key economic drivers for our region, as they are for other developing regions. A quarter of Latin America and the Caribbean trade is with Europe, and a third of the direct investment into our region comes from Europe. There are also the cultural and human linkages that are driven by the wealth and opportunity gaps, including the 5 million Latin American workers who live in Europe. Because of those linkages, European policies, business standards, and consumer behaviors ripple through our region, large countries and small islands alike. Your border carbon taxes shift our means of production. Your banking regulations affect our cost of and access to capital. Your traceability rules drive the health and environmental standards of our food output. My bigger point is that what Europe does matters deeply to the developing world. Your trade policies, taxes, the structures of your investments, your banking regulation, in particular, your citizens' commitment to multilateralism, and relatedly, your consumers' unique willingness to finance a part of the cost of addressing global public goods, such as climate change. By extension, what Europe's Multilateral Development Bank does is critical to our region and to the rest of the world. The IDB's value proposition comes in large part from our deep local knowledge, our hundreds of staff on the ground in countries across the region, and the 65-year history of investment and policy lending, the balance and interplay of public and private sector instruments and approaches. If we consider our comparative advantages and we replicate this across the world's regions of development, we can envision how a coordinated and well-designed response among complementary MDBs can most effectively address the multiverse of global challenges we confront. MDBs have a special role in fostering development while helping countries respond to crises because of our blend of long-term affordable capital, our leverage of and partnership with the private sector, our commitment to knowledge and technical acumen, and of course our mission-driven focus, which puts development effectiveness and the impact of our interventions on people's lives first and foremost. These are the qualities that make us unique animals in fostering growth, promoting sustainability, and combating crises. As this year's coordinator of the MDBs, the IDB is committed to meeting the expectations of our shareholders, and the EIB will be an important partner in this success. Yours is the only multilateral development bank that offers financing which straddles OECD countries, emerging markets, and developing economies, that covers home turf and faraway lands. The resources, experience, and leadership of the EIB will be critical in each of the areas of collaboration that we are pursuing. What are those areas of collaboration? How have they been articulated so far? At the World Bank IMF annual meetings in Marrakesh, the heads of the MDBs, including both of our institutions, agreed to strengthen our collaboration by scaling up financing capacity, boosting joint action on climate change, enhancing country-level collaboration, strengthening co-financing, and catalyzing private sector engagement. And in most of these areas, we are already working together bilaterally and sometimes as a platform. In fact, many of our coordinated activities already touch on several of these areas of agreement, like a Venn diagram. In 2022, the EIB and the IDB signed a mutual reliance agreement to better support climate-resilient projects throughout LAC. The agreement was aimed to improve project implementation and monitoring, empowering both institutions to finance climate-focused investments more efficiently. Through the European Union's Global Green Bond Initiative, we are cooperating on technical assistance for promoting green bond markets in LAC. And last year, in alignment with the goals of the Global Gateway Agenda, the IDB, along with the EIB and the European Commission, facilitated a debt for climate swap in Barbados to enhance resilience of water infrastructure. With the financial instruments we are designing, there is more that we will be called upon to do in close coordination in the years ahead. We can complete the globalization of the Green Bond Transparency Platform. We could expand the framework for exposure exchange agreements to include non-AAA organizations, exploring structured or bundled transactions and other innovative ways to stretch our balance sheets. We could jointly establish common indicators for sustainability-linked bonds or loans tied to issuers' performance on predefined ESG objectives measured by key indicators. Our Amazonia Forever platform will rely on these types of common indicators. Spain has already generously committed funds to help undertake the work. We could work on establishing a common approach to climate-resilient debt clauses or catastrophe clauses, KPI-driven incentives for borrowers to invest sustainably through loan discounts against verified climate and biodiversity targets. We are financing these discounts out of our own net income in our IDB Klima program, but given the demand we are seeing, this will stretch beyond the ability of one MDB's resources to sustain and grow. We can expand the use of credit substitution guarantees if we can jointly rally our donors to this cause. With the Swedish International Development Cooperation Agency, SIDA, we've been using credit substitution guarantees to strengthen capital adequacy and boost lending capacity. We can learn from each other on how we manage credit risk transfer transactions and expand their use. Releasing these financial innovations into the markets for the good of our clients and their ability to manage crises, disasters, and global public good challenges is deeply rewarding. It also requires standardization, common glossaries of financial instruments, and all hands on the wheel if we are to build them around platforms of support, not just one-off, ad hoc bond emissions and loan agreements. Which leads us to collaboration in the way the MDBs work together. An area that is strong but could probably be further strengthened. It's a tremendous accomplishment already for us to parallel finance a large project or even co-finance under one MDB's procurement and safeguard leadership, but addressing challenges to contracts, claims, misprocurement, delays, corruption charges, or any other significant setback to our joint projects as one voice will require an even deeper level of collaboration and trust. And finally, there is knowledge. It is not only the EIB's $500 billion balance sheet and global reach that will be critical to MDB collaboration. It is also the knowledge embedded in your work. Some of that knowledge is codified and downloadable, but much of it is tacit and built into the experience of the staff. And of that knowledge, there is a unique Europeanness that is important to recognize and to help transfer. I'd highlight 3 European themes among many that come to mind on the frontier of knowledge and experience that are foundational for development work globally, particularly in our region: regional integration, the valuing of public goods, and the functioning of systems. The atomization of the LAC region's economies is partially to blame for inefficiencies in productivity and low growth, and greater regional integration remains one of the defining challenges for our region, for Latin America and the Caribbean. Because Europe has built super-sovereign markets, institutions, and regulations, its ability to overcome the usual sovereign limits on economic development and crisis response serve as critical examples and aspirations for our region. When we need to estimate the dividends to trade and growth that will come from building trade corridors and reducing border frictions, our models are built on real data from European trade volumes and values, from transport times and costs, driven by integration across the past decades. Although I am speaking about Central America, Mercosur, the Caribbean, the Andean region, the same holds true for the Mekong Delta and ASEAN integration plans, for the northeastern and central trade corridors of Africa and the Southern African Power Pool. Far away from Luxembourg, Brussels, and Strasbourg, integration means Europe, and Europe means integration. No matter how bumpy that road has felt, your lived experience is the global benchmark on how to overcome cooperation failure, grow markets, and manage regional public goods. The second theme of Europe's development path that is of existential importance for the rest of the world, and particularly developing regions, is your commitment to addressing public goods through investments and policies, especially those that touch on the pricing of externalities, as well as regulations that value those externalities. This affects everything from trade to taxes to banking, carbon markets to utilities. Latin America's producers and workers respond to the demands of European consumers who increasingly value sustainable supply chains, who count the kilos of carbon on the labels of their goods and expect to be able to trace the food that they eat back to the farm it came from, or even the animal that produced it. And finally, your knowledge on how projects fit into systems and how systems depend on institutions that function is deep in your DNA. Let me offer an example to show what I mean. When multilateral development banks working in countries that are struggling with regulatory and institutional capacity, with weak market and rule of law, when we work to bring private investment into economic or social infrastructure, we have to work with 2 hands simultaneously. One hand works on the project structuring, the financial architecture, the credit enhancements, guarantees, other efforts at de-risking needed to crowd in the private sector and provide a sustainable service over the life of the contract. But the other hand has to be working on the system, the power market, the water utility, the capital markets, the healthcare educational system, since great projects in broken systems do not produce the economic, social, and environmental returns expected of them. Across Europe, for the most part, systems are working. Utilities are cost recovery, power markets clear supply and demand. Schools provide quality education through their robust curricula, teacher capacity, administration, and pedagogy. And so your technical teams know not only how to structure projects, but what a functioning system should look like. This institutional capacity, these functioning systems and markets are critical for the developing world. And they're just an example of what we need, what the world needs from the EIB. I hope I've used these moments to offer us all a little bit of encouragement. We have a lot of work to do, which is the theme of your day. At the IDB, we are looking forward to joining you in addressing our region's shared and unique challenges. There's so much more we can do together. We can be bigger, bolder, more impactful. And if you've ever been to an IDB annual meeting, you'll know we can have fun doing it too. Thank you very much.
Thank you, Mr. Jordan Schwartz, for being with us today and having shared your knowledge and insights with us. And indeed, multilateralism is key to overcome